conversation forward to get a sense of what the retail activity is. Satish Pillai, Managing Director and CEO of CIBIL, joins us now. Satish, last time we started with the good news and we ended with the good news. This time, will it be the same?
So, I think rather than qualify what the definition of a good news is, there has been a slowdown in terms of the intensity of growth. Now, I'm not just playing on words. If you start seeing the growth used to be, last time you spoke, about 30%, now it's in the mid-20s. So the point that you mentioned, there is a slowdown in terms of a strain in terms of liquidity on the supply side. So what's important to understand, it's not that the demand has slowed down. The consumers are still looking for the same type of products or same type of funding. But the supply side in some of the segments has actually slowed down.
But Satish, banks still have a lot of cash. I mean,
Absolutely.
NBFCs may have slowed down,
yes,
but ICICI Bank, State Bank of India. So if a consumer is very keen to, let's say, buy, and I'm purely talking about all of us as a consumers of products here. If you want to buy this mobile phone, and if I don't get it from my favorite NBFC, what stops me from going to a bank?
Absolutely. And you see that today. So for example, actually the example of the phone is perfect.
Yeah, you got a deal on the HDFC Bank credit card. So.
Exactly, yeah. And the four different options where you don't even have to take a credit card out is actually available in all the stores today. So the demand is very active, right? So what's important to understand is if you actually demystify some of the lending, retail lending, and you see things around auto is slowing down by definition, manufacturing is slowing down, buying is slowing down, we know that. LAP, or loan against property, delinquency is actually a little higher. But you look at consumption-based lending, and that's important as well because that's the piece that we're speaking about. Continues to grow at massive rates, right? And if you look at the last 10-year CAGR, that's incredible, right? When you talk about the mid-20 rates and so on and so forth. The delinquencies, the NPAs there are still low. It's not a delinquencies issue.
So where is the problem then?
So the problem only exists right now on the asset side. If you see on the home loan, which we know the problems were either supply side or there's a glut, there's builder level issues that showed up in HL and LAP. Consumption side, there's actually none. So we keep looking for it. Right? From our perspective, our purpose, the why we were created was to try and figure out where the trends are going. Exactly. There are no disconnects. And you have to look at the disconnects in terms of saying, somebody took a loan this January compared to January of last year, the first 3 months any different? It isn't any different on an overall basis. But the funny thing about India is just the volumes are so high, averages are misleading. You start looking at percentages. So there are enough people who are taking loans frequently, which try actually monitor that a lot. So one piece, and it's not bad news, it's something that I worry about. There are probably 8% of people take 2 loans within 30 days right now, 8%. That number was 4% about 2 years ago. So that double the number of people are taking a lot of loans. The reason for that is very simple, it's so convenient. You don't even think it's lending. Actually, for more of the time when you buy a phone, it's 0%. So it's not even considered lending. So there is a big change that's actually happening in terms of, it's not necessarily loan stacking, but the urgency at which the consumers are getting loans is double now than what it was before.
When did this happen last time in the economy? You must have analyzed
that
absolutely. Data. And what happened after that when we saw a slowdown?
So it's interesting, right? Indian retail is what, mid-90s, so it's not as if we had retail even before. The last big thing was 2006-07. This is very different from 6 or 7.
Okay. How is this different?
So 6 or 7 was very, very classic in terms of there were a lot of people getting loans, but it was the same individual again and again and again. So on average, a credit active consumer tended to have 3 credit cards open. This is 2007.
Wow.
Okay.
2 installment loans. And that was the average Indian consumer. Today, you don't see that. So it's a much wider base, right? There are about 300 million people or 30 crore individuals actually in the loan market. So the numbers are so vast, it's not as if you're seeing a leverage or a Taiwan type of a moment where you are getting 15 loans and I'm getting 10. It's actually much broad based. There are more lenders in there and they're actually nationally scaled. So, you see the Bajajes of the world, you see HDFCs, ICICIs, Axis, they are like much broader based. So you're actually getting into even the top cities are actually large enough for them to be able to get to. So it's not a leverage from an amount standpoint. What's actually happening is convenience is high. People are taking a lot of loans. They are good credit loans. The only thing that actually worries me right now is like 2 things. One is this element that a lot of people are taking a lot of loans and people who need a lot of credit tend to be riskier. We know that for sure. The second piece is the economics of the lender. So yes, the cash is there for the big boys, but the smaller players, and there are so many of them, their cost and the economics of lending does not make sense in assisted digital type of models. I think that's the big worry for me. The supply side slowdown has an impact at some point in time.
But the balance and checks are not guiding them not to loan.
Yeah, correct. So, again, the risk definitions might be okay.
Is there.
No, correct. Absolutely.
How are they getting loans then?
So, right now, I think just because the scale of the large lenders, everybody is everywhere. So, it's not as if you don't have an option. There's hardly a lack of option. Therefore, you could always go to somebody else. But the big challenge is the smaller lenders, if their economics slow down, because their cost of acquisition is so high, you'll have a supply side issue. And when you have supply side issues, it'll show up in delinquency probably last. So I wouldn't look for bad news in delinquencies. I think a lot of the bad news might actually be in terms of the economics of the smaller lenders and the NBFCs. Not just in terms of the liquidity, but actually ask for the cost of acquisition. So one of the big measures for us is we ask the question when we see customers coming to us, when their cost constraints for them is because their cost of acquisitions are so high because of assisted digital models. So everybody has an app, but app by itself, if I am applying on it, the cost of acquisition is low. If it's somebody at a Kirana store or somebody actually at a Chroma, the cost is very high. And therefore, it becomes more and more difficult for them to actually be profitable lending that way, and then actually has a circular effect. So the delinquency doesn't show that. It won't show up in delinquency. I think the story lies in individual lenders and how they are looking at acquisition, how they're looking at collections. Those things are actually dramatically changing in India.
But Satish, tell me, we've been talking about this consumption slowdown, and it's across categories, across segments. How is it that you're not seeing a slowdown in fresh loans? I mean, people are buying lesser cars.
Yes.
They're not getting liquidity to buy, purchase new homes. People are buying lesser phones as well, is what our understanding is.
So, 2 points about that. The first piece in terms of our definition of consumption loans, we're looking at non-asset based. So, yes, phone is an asset, but let's kind of assume that it's not.
Not really, yeah.
So, the big piece on the car slowdown, we see car lending or auto lending slowing down.
Okay.
Just as everybody's talking about is, that's obvious. On the phone side, phones might be, if you ask Samsung and all those providers, they'll say they're not selling as many as they used to, or the growth has slowed down. But right now, lending is replacing cash. Lot more people who were either putting it on their card earlier, that was spent, or they're paying back cash, are now taking a loan to do it. So it's a replacement that's actually happening. In fact, if you go to a Chroma today or any other store today, and you're looking to buy, it's more efficient for you to get that 8-month loan at 0% interest. That's the best float that you can get. Can even pay on a credit card. The credit card has an interest associated with it. So I think it's important to look at, the manufacturing side of it is very different, where there is a shift away from cash to lending. That's interesting. That's what's happening. All consumption loans, all small ticket loans is replacement of cash. It's not a instigating of demand. Demand was always there. Now consumers are able to see that I can actually finance this stuff, and they don't even think of it as financing. Why would anyone?
What about the other white goods? What about the other white goods?
So wherever there's financing, if you see one of the things that our data shows as well, the average ticket size for these consumer durable loans at, whether any of the tech stores, that's actually going down. So all of these are now, earlier it used to be ACs were for getting financed, TVs getting financed. Now it's across the spectrum. There is absolutely nothing that you'll find in the store that they won't finance. And then tomorrow and even today, you'll start seeing financing of events, of holidays, and many other things that start happening. And from a consumption standpoint, I was always doing it. Now I'm financing it, but I'm financing at 0%. So it's great from a consumer perspective. The question then becomes, how are you acquiring these customers for this lender? If you're a large lender, the economics make sense for you. You have the scale to put 20,000 people everywhere. How do you actually do it otherwise?
Aman, any follow-up questions?
Yeah, you're talking about a lot of the trends in rural, in the urban. What about rural? Because that is
So, it's interesting that you point out, because India still 50% of the consumption-based lending is all top 5 cities, right? It's actually in the metros or the, the large cities. But the fact is 50% is still outside. So of the 20 million applications for credit, 10 million is still outside of it. So there is an impact of this everywhere. If you talk to the large banks or anybody who's in this field, they are in tier 3, tier 4 cities where also cash is getting replaced by an immediate loan for 8 months. So I think that's happening everywhere. Disproportionately, we haven't seen the proportion shift actually. And that's interesting in some ways. One hopes over the next 2 years you start getting a lot broader. But I think that has to happen because well kind of runs dry after a while, because you can't keep going back to the large cities.
Satish, we've so far addressed what could be called as a pattern in consumption. But let me throw some data at you.
Sure.
Unemployment at a 45-month high.
Yeah.
Service sector is not growing at the rate that it was growing. And
Correct.
let's be real. I mean, now not only you can see the slowdown, you can feel the slowdown, and you can also smell the slowdown.
Yeah.
There has to be a level beyond which the guy who bought a car or who bought a mobile phone is going to put his hands up in the air.
Correct.
Look,
Correct.
There's nothing I can do.
That's
I
right.
never intended to do that, but my compulsions are at play.
Absolutely.
Are you capturing that data yet?
No, so right now, it's not shown yet. Okay. So the point is, how much lag do you see before it starts impacting the phone? Now, it depends on...
Just what new phone is it? I mean, I haven't bought a new phone. Because
Well, if you paid cash, you probably lost out. So it's important to kind of look at where the is actually happening. So in a typical model where it was, let's say, credit card led, where there was a lot of consumption of, let's say, home loans or car loans, absolutely you will actually see the impact immediately. When it's much smaller ticket size, it's a lot more lagged effect. So one of the other questions that we talk to customers about is saying, your NPAs are like way too lagged, they're 3 months old, right? You ask the question in terms of collection cost. And if you ask the smallest lenders, you ask the fintechs, their challenges are collection costs are going to actually impact their economics.
So are we looking at potentially bad news coming with a lag effect in the second half of this year? Next time when we invite you over, let's say after 2 or 3 months.
I hope it's not bad news, but I think there will be. It has to have an impact, right? So when there is a slowdown, when there is a crunch in terms of disposable income, you will not see the impact of 2006 or 7 based on this data.
So a lot of retail NPS?
You will not expect to see 2006 or 7. You will not.
That's a financial crisis dominated
Correct,
effect.
but even
so
in
what's the worst
India,
it can get in the current scenario?
But I think, we don't know. We don't know just because it depends on your payment hierarchy of when you stop paying smaller ticket size bills. The second big thing is these tenure of these loans are about 8, 9, 10 months. So a lot of times they actually flush out pretty early on. So you don't actually have an extended risk on the books. So from my perspective, next time we meet, I don't expect it to be dramatically different. I expect to see pockets where you're actually seeing delinquencies, even for the large players, you'll start seeing delinquencies in there. But it shouldn't be very, very massive because we should have seen indications already right now.
Okay, I just want to go
so
back
banks
to that data.
or NBFCs, who's in a more precarious position?
But I think, it's what I would actually talk about, even there are some banks which actually don't have a large liabilities base, where the cost of acquisition is high, where the source of capital, not just in terms of borrowing, but how they acquire customers is very high. They are actually going to be in a tough state.
Okay, right. I just want to go to that data, Satish, and maybe you can look at that screen here, the credit trend, and just stay with this. Autos, homes, LAP, credit card, unsecured loan. We try to capture almost all the categories. Is our assessment right, and will the trend be same for the better part of this year, in the second half of this year? Auto is a red, home loans are flat, not contracting, they are flat. Okay, that's encouraging for me.
That's right.
LAP, it's not a very growing category, but it is still growing. And unsecured loans, very important for the HDFCs of the world. It is also down.
Correct. And if you look at the rates,
are we assessing it correctly?
If you see the base effect is also important. If you look at the cards base and the unsecured loans base, those are very, very low numbers. So obviously BIPs matter in terms of scale, but I expect to see in the next 6 months the same type of trend that you continue. On the auto, that's sectoral, that's going to impact it by definition. For the others, you expect to see the same
So
trend.
after 6 months, if hypothetically meet, this picture will not change dramatically.
Should not.
You want to look at the graphic again before you comment on that?
Because we have it on record.
No, absolutely. I don't expect it to. And I think I don't expect it to just because of, two things. The large players, they have the scale, they have the benefit, and they are very, very risk averse.
Fair point.
And there's a benefit to not 7. And I think if you go through a cycle and you understand the importance of it, that holds you in good stead. And I think I continue to see a whole lot of paranoia. So you are asking the question, my customers ask the same question. They ask for bad news first. That's a good sign.
Okay. Fantastic. It's always a very insightful conversation with you.
Thank you.
Fantastic insights coming from Satish Pillai.